Good afternoon, everyone, and welcome to today's webinar by the Payments Association, sponsored by Payall. It's called It's Time to Change the Status Quo in Cross-Border Payments. Before we get started, I have a few quick bits of housekeeping. You can submit questions to today's speakers by typing your questions into the Q&A tab in the control panel. There is also a chat box for discussion, but please use the Q&A tab, as that will help the speakers keep track of what's coming in, and you'll be much more likely to get your question answered. You can send your questions in any time, and the panel will address them towards the end. We'll be leaving plenty of time to answer questions, so please don't be shy. You can ask your questions anonymously if you prefer your name not to be attached. If you have any technical issues, feel free to send a message through the chat box to myself or Maria Stavro from the Payments Association. I am now going to hand over to Jonathan Tice, who's Director of Research and Investment at Kinaz. Over to you, Jonathan.
Thanks very much, Kate, and good afternoon, everybody. Welcome to this webinar. I'm lucky enough to be moderating because I was invited to write a white paper on pretty much exactly this topic, and I got to meet and chat to Gary Palmer at Payall a number of times, discussing what's actually a really interesting topic. So Gary, hello. The paper, King for a Day, I think one of the things that struck me most when I was doing the research and chatting to some very good interviewees was when you think about risk in the financial services industry, what amazes me is the way that pretty much broad brush, doesn't matter which end of the spectrum you are, you're deemed high risk. So I think as a starting place, how on earth do you go about trying to resolve that massive elephant in the room of a problem?
Well, Jonathan, thanks for having me, and I really appreciate the thoughtful effort in creating the white paper. At the core, the challenge is, or the reality is that these payments are considered high risk, certainly from an inbound perspective into a country, because the local correspondent bank or clearing bank doesn't have visibility beyond some preliminary or minor details about the payment. So really understanding who the disperser is, the foreign disperser behind the foreign financial institution, what sanction checks have been done, what electronic ID verification has been done, what their commercial activity or source of funds is, and why they're paying someone domestically, these things are never answered in real time as a part of a transaction. So that's a first issue of risk that's been around for 50 years. The second part, and this is, it's also very important, is that on both the originating side and on the clearing side, anytime a financial institution has decided to either offer these payments or clear these payments, they've gone to their regulator to get permission to do it and constructed their business plan and how they're going to operate. And all of the rules and procedures and policies, or the vast majority of them for most banks, all of them for most banks, are executed manually. And we all know what happens when humans are at the core of operating stuff. We make mistakes, we forget something, we don't do something. And so the element of risk comes from these two perspectives. One, we tell examiners or financial institutions tell their regulators how they're going to operate, but they don't have the tools or the technology or the software to do it systemically. They're doing it manually. And two, it's the opaque nature of cross-border payments. So it's been that way for 50 years. So in order to really fix it, and we've tried and tried and tried, we've seen incremental changes, but nothing has really fixed it. So you've got to completely think differently about the problem and how to fix it in order to make big changes.
Great. Another quite fun part of the paper, we had a survey running and got a lot of kind of suggestions about where the respondents would start. And one I'm going to pose to you, which sort of flies in the face of exactly what you're doing: stop focusing on tech as the answer and instead think about what drives business model changes with global systemically important banks. So obviously you just talked about people. The fact is there are several massive banks now. One of them's just dropped off the GSIB list, but how do you try and level a playing field when you've got so much power in the hands of a few smaller banks, particularly at the higher value end?
Well, I think the key is to, as you say, really understand the use case, understand the participants, but it's the smaller institutions have to be able to go to their regulator and have to be able to fashion a story that says, listen, we've got tech and paradigm that enable these payments to be safe, compliant, and efficient in a way that others haven't so far. And it starts with crafting a very clear, compelling plan and having provable capabilities that demonstrate that. When a regulator, when an examiner, when a central bank has confidence that there is new tech, but it's not about the tech, it's about how you're solving the problem, how you're bringing transparency, how you're enabling verification of data, how you're enabling proper compliant sharing, how you're using data as a part of a transaction. When you're able to demonstrate that high level of competency to a regulator, to an examiner, then we're going to see new entrants, financial services entrances, small and medium-sized banks and EMIs and PIs and others have a chance to re-enter the space. But that's the first step. You've got to really wrap your mind around, we got to do it differently. We can't simply do it the same way it's always been done, because it doesn't work when you look at the stats, whether it's the fines that banks pay for ineffectively executing money laundering, or whether it's the up to 5% of the global GDP that gets laundered through banks. So you can understand from a regulator perspective why there's this desire to sort of shrink the audience that's enabling these, so you can better control them and observe them and watch them. But it's not helping anybody because it hasn't worked anyway. So if it's not working, why keep doing it?
Well, I mean, I suppose one of the challenges, as you say, it can take days for this money to arrive where it's supposed to. But the world's changed, and if you hold somebody's money for days, you're making a lot of money yourself. And clearly, yes, it's in the interest of regulators, etc., to speed these things up. But going back to the power of some of the incumbents, it has never been more profitable to sit on somebody's money for a bit longer. So in terms of kind of liquidity, and in terms of the cost of liquidity now, and the way things have changed, I mean, that was another part that we didn't explore as much as I'd like. But how can technology actually drive change in terms of liquidity and stop the banks from sitting on people's money, which is effectively what they do?
Well, Jonathan, your question raises two important points. First of all, in most instances, the local liquidity, the funds availability to deliver the recipient is already in country in most instances. The delay is around either the fact that financial institutions on both sides of the transaction are executing all of these manuals and policies and procedures, which are slow, as I said, all those bad things before, or they've built these triggers in to preserve as you say, some of the deposits in order to maximize profit. So the key here is for financial institutions, one, they've got to recognize customers want things faster. Doesn't matter what it is, and again, we don't have to go through all of the other examples in our lives, but certainly if we just focus on the speed at which domestic payments are processed now globally, thinking about how FedNow operates in the US, all the way to faster payments in the UK and SEPA, for 3 examples, people want things done faster. But you got to solve the compliance and risk and safety problem first. And you got to wrap around it some guardrails that protect customers to the best you can from bad actors that try to take advantage of them. The second part is the banks and the financial institutions that are involved in this have got to reimagine the economics that if they're fixated on preserving deposits for as long as they can, it's going to have a bad outcome for customers. That's the first thing. But the second thing is the funds are generally maintained in the system anyway. So they're not leaving the system. They're not leaving largely the bank. Maybe they're going from one bank to another, but generally the outflows and the inflows in many cases are matching each other. So this artificial time delay under the guise of holding on to money, it's really not an argument that I think holds much water. And I don't think most banks are fixated on that. I think it's the sort of the combination of how it's always worked, this idea of familiarity bias, and the concerns about safety, soundness, and compliance issues that kind of have created these series of issues that are causing these payments to be so slow.
Sure. I mean, partnerships we'll touch on a little bit later, but I suppose the other thing that's changed dramatically in the last 3 or 4 years is the economic outlook in the world and countries becoming more inward looking, etc. And again, we touched on all this in the paper. But when you look at the G20 roadmap and you look at the focus on costs and remittances and talking about a 3% cap when it's 8 to 10% in Africa at the moment, and you're trying to get payments companies such as yourself to invest in this environment when inflation in emerging markets is running at 10, 15, 20%. If they were to rewrite their roadmap right now, do you think the order would be the same, the priorities? And what do you think would be top of their list if they started today with the technologies that have developed over the last 3 or 4 years and the shift in economic conditions?
Well, two things, Jonathan. One, the idea of having sort of a target global sort of cost structure for these payments, it's a great idea, but it's simply not practical by virtue of liquidity issues, currency volatility. There are so many variables that go into that, risk, all of that. So you can't expect the sort of same cost of enabling a transaction for an FI in one corridor versus another. And also it varies by the use case or the originating entity and the receiving entity. But what I find not disheartening, not discouraging, but what I find is this fixation on these fees, costs, and rates. But until you fix the root cause of why these things are so slow and why they're so expensive, and it's the absence of software that addresses the compliance and risk and safety and soundness requirements on both sides of the transaction in a real-time way, in a transparent way, you can't fix cost because you simply can't. So reframing it, I would put the challenge, if I were the authors of this, and again, I get it, familiarity bias causes us to think things are a certain way and they can't change, but everything around us has changed. So we need to be bold enough, and the authors should be bold enough to say, we need to focus on changing and fixing stuff at the root that are the causes of this problem, rather than hammering people over the symptoms or the results, which we see, which are these costs, these high perceived costs and variability.
Cool. Last question for this section, but you, as an American, I guess the one thing to my mind, reading all the background reading I did about cross-border payments, is we're used to the dollar as the reserve currency, etc., etc. But the fact is, some partnerships and the way some countries are thinking about cross-border payments, facilitating trade, etc. Is there a risk that the US effectively isolates itself? And does that make a difference to the way you're planning your business, how you can help? How realistic do you think it is that we kind of do get split and you've got the dollar-denominated payment systems, the biggest trade partners for the US, and then you have the rest of the world that sort of cobbles together either good actors, bad actors, whatever it may be? But do you think that's a realistic risk? And if so, what can we do about it?
So candidly, in the last 25 years, I've lived abroad for big chunks of time. I've worked abroad for big chunks of time, and in some cases have spent more time abroad than in the US. And of course, I've been active with our Federal Reserve Bank system for a decade or more. And I understand there are people that are fixated on the reserve currency concept. My view, when I take a step back from that, I have a fairly, I hope, pragmatic view, which is our job at my company is to ensure cross-border payments are safe and sound, transparent, and efficient for all participants and inclusive. I'm indifferent as to whether the transactions are occurring in dollars, euros, pounds, or whatever. We're going to enable and provide framework and infrastructure that enables all of those things. Now, having said that, when I have examined sort of critically some of these other ideas to dethrone the dollar, it's nice to have these conversations, but if the users of if the participants, if the buyer and the seller, and in many cases the seller is being paid in some currency or in some mechanism with high volatility, it doesn't matter of either political interests or commercial interests that want to maybe change how transactions occur. If the participants see a downside of going down one path versus another, they're not going to go down that path. So my view is the market is massive. We're talking in excess of $150 trillion. There will be dozens of different paradigms. There will be, thankfully, some of these new constructs and new ideas that come on the scene. And I'm not fixated on, are they dollar denominated or some other currency? I'm fixated on making them safe, making them efficient, making them compliant and inclusive. So I as a CEO, I'm not worried so much about the reserve dollar concept, but I think it's I think it's it's a little bit naive to think we're going to just change some of these things wholesale if there's no benefit to the participants. And this is what people have to keep in mind. If there are benefits to those who are making payments, those who are receiving payments, then things will change. So that's my reaction to that.
Thank you. I mean, we'll move on now. The one thing I would say to that is the benefits are quite often national interests. And that's the one thing in the paper. Marius did a great job explaining why the digital euro is there to make sure that the ECB can keep its borders. So thank you ever so much for your support as well on this whole project. We'll bring you back into the conversation a little bit later. But now I will move on to the panel, if I may. And
Thanks, Jonathan.
If you could each introduce yourselves. So maybe start with Matthew. If you could just introduce yourself, your name, company, etc. And we'll go through all three of you and then kick off.
Yeah, great to see you all. So Matt Graham, working in the transfer solutions team here at MasterCard, in particular selling our cross-border services account-to-account solution. Been at MasterCard about 7 years now, so great to be on the panel.
Thank you. Nkosi?
Good afternoon, everyone. I'm Gosi Moyo. I'm with Crown Agents Bank. I'm the head of global payments and mobile sales. We are a UK regulated bank with the main focus on foreign currency and cross-border payments. We cover over 100 currencies. Thank you.
And John?
Good afternoon, everybody. I'm John Bell. I'm the Group CFO for PXP Financial. We're a PI licensed acquirer, primarily focused in UK, Europe, and US. And I guess my interest here is on sort of both sides, in the sense that a lot of, a big part of our business is about moving money around, whether it's domestically or cross-border, but also sort of from the point of view of looking at what we can sort of solve some of the issues that people are facing.
Thank you. I mean, obviously, cross-border payments, massive subject, from small remittances through to multi-billion-dollar daily liquidity settlements across banks. Let's start with the sort of remittance end. And Matthew, I know that MasterCard has got a long-term goal to bring the unbanked into the world of finance. Can you just talk through kind of the way, what your role is in terms of driving the unbanked into the digital age for financials, and sort of sending money, spending money?
Yeah, sure. So I guess the challenge we see today is that the model that we have, it's not a solution for all, really, and there's a gap in that sort of underserved segment. A MasterCard Borderless report that recently came out, sort of third of those sending remittances back home have limited options in terms of accessing that money. And so from our side, what we're doing is it's our own proprietary network. So effectively, one single secure connection enables our customers to send to a range of payout options, be it bank account, mobile wallet, cash out, or card. To bring it back into perspective, I think the World Bank recently said that over 50% of all global remittances are to underbanked or unbanked. So it causes a real challenge here that we're looking to try and solve for. I guess putting that into context, into a real life example that MasterCard are working on, a good example of that is PaySend Libra, a leading fintech in the UK that we're working with. They're sending, so they've set it up with MasterCard so that for a US sender to send to a recipient in LATAM, to their telephone number is linked. That recipient in LATAM receives a text message and then can automatically get a virtual MasterCard card to then be able to spend on goods and services or cash out. So we're looking at ways of partnerships and how we can work together to try and solve for this challenge that we're seeing today.
I mean, one thing, having covered financials for nearly 30 years, I thought I knew Visa and MasterCard as companies. And I suspect most people will not realise the growth in this part of your business, the rails you've got to about 100 countries, which is great on the one hand, but on the other hand, it makes you an Amazon. I mean, you can afford to charge less already, and you can deliver services to countries that competition can't. So again, what's the sort of pushback from regulators? Because Marius in the paper, for example, was saying, look, the ECB do not want MasterCard and Visa to be the only two kind of retail payments rails in Europe. They don't want that. So given your sort of dominance, the fact that you've got a system and a network that is second to none and nobody can build, I mean, how do you manage that? Because clearly, as I say, you guys don't need to charge very much because the volume growth is unbelievable. I was amazed when I looked at the numbers. But as I say, the flip side of that is there are going to be national interests that look at you guys and think, you know what, that's a little bit too much power in one place.
Yeah, so from our side, we're looking at how can we improve and enhance that user experience, and we're using the infrastructure that we have to do so to keep costs low and so on. From a regulator perspective, we support public policy objectives, and so we have a team dedicated to that. We've been a supporter of, as an example, the G20 cross-border payments roadmap. We've been there since inception, and I think it's universally acknowledged that close collaboration with the private sector is needed to shape that vision for cross-border payments. And so I think it's a combination of us working together all as one group to get to that vision and the place where we want to get to. As an example, MasterCard is part of the Committee on Payment and Market Infrastructure, the CPMI piece as well. So we're looking at how we can improve access to payment systems and so on. So we're trying to, I think it's all around partnership and working together and how we can improve this together.
Great, thanks. And then following on from that, Cozy, clearly, you said 100 countries or more. What's important is switching on emerging markets and opening these channels up. What are your biggest frustrations and roadblocks when you're trying to build your business and deliver your services? And again, thank you, Matthew, just gave us a couple of examples there. If you can talk through a couple of examples so that the audience can understand what the problem is, but also what the problem is trying to solve the problem.
Okay, thank you, Jonathan. Just to put a bit of context before I get into the detail, in terms of the client profiles that we support, so we bank some central banks, we bank other commercial banks, we have fintechs and remittance companies as part of our client base, and we also support humanitarian organizations. I think the bigger challenge that we face are the diverse local regulatory conditions. So pretty much each country that we interface with has its own set of regulatory guidelines or requirements in terms of how you can trade the FX, in terms of how the funds can be delivered into each country. The other aspect of it is, and this is more within the correspondent banking network, in terms of the different risk appetite that various banks may have. So if I give an example of a payment going into Afghanistan may pass through 3 or 4 banks, and not all the 3 or 4 banks may have the appetite to deliver that payment to the country. So that could result in payments being stuck in the process and taking a lot of time to resolve. Capital or exchange controls are a major issue for most of the emerging markets. So you may have the best of technology connections going into that particular country, but if you are not able to have an arrangement where you can trade and deliver, trade the FX and deliver the funds timely into that country, whether it's from a documentation requirement, or in some cases, we see transactions in progress and the rules actually change. So you have a transaction that originated under one set of rules, and before it's delivered to an account, the local regulations have changed, and then it takes a bit of time to unwind and resolve that particular transaction. The dependency on the dollar is also a challenge that we face. Again, this coming through from a correspondent perspective, because there's less and less of a risk appetite from some of the dollar clearers to support the emerging markets. So that also tends to complicate the whole end-to-end experience in terms of supporting clients in making payments into some of these markets or making payments out into the rest of the world.
Thank you. I mean, I suppose when you look at FX in some emerging markets, and as you say, capital control, some of the things that have happened in history, the lesson from Bitcoin, the volatility, the advances that are being made there, do you think that sort of digital currencies, a digital form of stablecoin or something, could be part of the solution to narrow the gap between the challenges that you experience and say a US to UK or a US to Europe transaction? Do you think because of the volatility and these other issues, actually the likes of cryptocurrencies and digital currencies will accelerate the solution?
It is an area we are keeping a close eye on. Not sure if in the short term that will actually address some of the concerns. I think if you look at it from a central bank perspective, the major struggle they have is the liquidity in terms of the hard currencies. And I think part of the concern is that if transactions are moving into digital currencies that they do not have oversight or control over, that could impact their, whether it's US dollar or other major currency reserves. So we think there's probably a role for digital currencies. We are seeing some of the central bank in Africa, for example, introducing CBDCs. So I think they are moving in the right direction in terms of trying to understand the value that could be derived from this type of solutions. But I think there is still that inherent view from the central banks in a lot of the emerging markets that they need to control the flow of funds or the flow of currency as much as possible.
Sure, that was a very comprehensive, thanks. And we talked about partnerships, etc. And at the risk of turning into a slight advertorial, it is an interesting partnership. So, John, I know that you, your PXP and Payall and Mastercard announced a JV, I think, earlier this year. Can you explain a little bit about what it is, but more importantly, talk about why you need partners, and also how do you go about selecting them? Because I'm more interested in hearing the frustrations, because it must be very difficult to work to solve something when you've all got your individual products.
Yeah, sure. Yeah. So as you said, I mean, we PXP has been working on a partnership with Payall and Mastercard to essentially launch a cross-border product. So, you know, I would say the sort of real focus is on sort of speed, security in terms of, you know, secure payments, transparency around fees, you know, making the customer experience as smooth as possible. So it's KYC, KYT is all sort of digitalized, and also giving sort of flexibility in terms of the number of countries that are served. So it's sort of using, as you sort of mentioned before, you know, obviously Mastercard has a significant number of rails and channels into, you know, 100 plus countries. That's obviously around giving customers options around where they can send money, but also how they can receive it as well. So it's obviously not just about being able to receive it to the bank account, it's also, you know, to wallet or pay to the card, cash in some cases. And I think it's you know, I guess the reason for us wanting to do that is to try and address some of the I guess frustrations that, you know, certainly I have experienced, we PXP has experienced in terms of you know, sending funds cross border, and as Posey was talking about, you know, if you have 3 or 4 cross border correspondent banks involved in some of those transactions, it's slow and potentially funds can just get stopped, and then it's actually a lot of time and effort to try and track those, you know, funds down, actually who's got the funds and what's going to happen. Are they going to get returned, or they're going to get you know, sent in recipient. And I think in terms of, you know, to your point on partnerships, I mean, yes, I think, you know, everybody has it's then around coming to a common understanding of what it is that we're actually trying to achieve. So this is around trying to give customer choice, but also, this is also about looking at how we build out our sort of opportunities and businesses as well. So, I think what we have put in place and what we will hopefully be launching in the very short term is a good product, and something that I think, I certainly hope that people would at least look at as an alternative to using traditional.
Great. I suppose two questions from that. One, which is of interest to the smaller companies listening. When you have an idea and you want to find partners, what advice have you got? How do you go about it? And the other one, from my personal perspective, if you remember back to the 90s, bancassurance, Alfinance, Europe, it was the new holy grail. And if you ever actually understood the economic split, it was extraordinary how unequal it was. And I can think of the Fortises, etc., of this world, and getting to know them and really getting to understand it. So one thing, how do you sell yourself and how do you find the right partners? But also, if the world's basically getting cheaper in the payment space, how on earth do you figure out the economic interest? Because quite clearly, as you've said, take MasterCard. They've got rails into countries everybody else can only dream of, which is the old bank assurance. The bank takes the 90% gain, everybody else fights over the 10. So if you can touch on those two, please.
Yeah. I think in terms of how we go about working with partners, it's a lot of it is around looking at other companies that we think have common interests. Clearly there has to be sort of alignment in terms of, if it's a partnership, everybody has to be able to bring something unique to that partnership, and it has to essentially work. Those things have to work together. Certainly we've worked with Gary and for a number of years. So that's a very natural partnership for us.
We're struggling to hear you a little bit, or I am. I don't know if you can get closer to the mic or.
Can you hear me now?
Yes, that's better.
Okay. Yeah, sorry. So I was saying that, in terms of how we go about, selecting partners, it's, part of it is around where we look for, where we can bring unique, and something specific to the partnership, but also partners who are able to offer something that we can't. But essentially those things together sort of become, a combination that works together well. I think in terms of the economics, clearly, that is down to negotiation, and I think that, a good partnership, even where you could argue that one of the partners has, is stronger, I think it is, around something that is sustainable and where everybody actually, receives sort of a fair share from, their contribution to the partnership.
Great. We've had a couple of very good questions in, but before we move on to those, Gary, obviously you're another partner in this partnership, and I know you've been flying around the world and chatting to a number of different parties. Can you talk a bit about the same thing? Because clearly you have a solution or a product to sell, but you've also got to pick the right partners. What do you look for from them? And again, if this is about pricing, ultimately, and solutions have to kind of drive the cost down over time, which we both sort of agree it's a bit too early to worry about the cost yet. How do you think about that part of the negotiation? If somebody wanted to approach you with an idea, how should they go about it?
So Jonathan, it's a great question, but first let me start and just kind of clarify. We are a new type of company, entirely a new business. We've created end-to-end infrastructure for the cross-border industry. So first of all, it's backward compatible to large global correspondent banks that have very efficient FX trading capabilities. They've got a lot of local currency. But where they fall down is in their ability to automate the business processes internally, compliance and risk, and where their partner financial institutions globally fail in that as well. So that's a paradigm our infrastructure is designed to support. We have an amazing relationship with MasterCard. We think what MasterCard has done is frankly, it's so cool. It's fascinating, taking some core assets, repurposing those assets being massive global liquidity, access to real-time domestic payment rails, and super efficient FX trading, and extending those assets out to regulated financial services and say, hey, we've got a new way for you to make cross-border payments. It's fascinating. It's exciting. We're humbled and excited to be MasterCard's partner for that. At the same time, we work with new paradigms where we'll directly connect, let's say, a domestic payment network in one part of the world with a domestic payment network in another part of the world, and bring technology to enable those payments to take place. So we don't necessarily, we're not married or wed to one construct or one type of partner. What we look for is where participants in the ecosystem have a way to add value and see how our platform, how our infrastructure can help them add value. So I've described 3 distinct paradigms we power, but there are more in the hopper. So it's really, from our view, are we adding value in terms of safety, soundness, efficiency, and inclusivity? If we are, we'll talk to the potential partner. If not, we're just not going to do it.
Great, thanks. Emerging markets, having been a banks analyst for a very long time, it was increasingly clear that banks with the BBVAs of this world, when they talk digital, because they bought in Turkey and they were in South America, they were ahead of the game of someone like a Lloyds or a Barclays. It always struck me that the digital adoption was better because you didn't have this legacy branch network. One of the questions we've had is, EMs are ahead in payments infrastructure and volume of transactions as well, as they don't have much card penetration. Is it true that EMs are moving ahead of the developed markets in innovation and tech in the payment space? Let's start with Cozy on that, and just what's your view on this? Is it very different depending on which region of the world you're in? How much do you care about digital and mobile penetration, etc., when you think about being able to roll out services? Can you just sort of talk through your experience?
Thanks, Jonathan. We do care quite a lot about the digital experience. And maybe to give you a few examples, we are connected to some of the mobile operators across Africa. And we can deliver from the time a client initiates an instruction to the beneficiary receiving the funds on their wallet. We can complete that instruction within 15 seconds of receiving that instruction, and it would have gone through the full transaction screening, monitoring, and all the automated checks. So the digital component of the solution is quite key for us. We are also integrating into various partners in different parts of the world, and where there's capability to integrate to an instant pay type of infrastructure, that is obviously the ideal scenario for us. But we also fully understand that not all the local clearing infrastructure is at the same level. So some countries will still operate on a batch basis, where maybe it's clearing once a day or the following day. So we do have flexibility on our side to try and work with partners in various forms, even within the constraints that they may have with their technology infrastructure. But it's really, digital is quite important in terms of our service offering.
Sure. to get through some of the questions. There's one for Matthew. I don't know if this is ominous or not. Matthew, what is the end goal for MasterCard with partnerships like PaySend, PromptPay, Thailand, etc.?
So a big part of it is how do we continue to enhance the user experience? And so what do we need to do to get to that end state? And in that case with PaySend as the example, it was around offering remittances via mobile phone providers. But it was highlighted there, I think, some real time as well and different sort of platforms. But a big component of our platform, of the account-to-account proprietary network that MasterCard have built up, is around real-time payments. So of those 100+ markets that we operate in today, 50+ are in real time, i.e. you send a payment to an Indian beneficiary, it will be received within a matter of seconds. So the end state is really for us is how do we create a more inclusive society, being able to send to more payout options, and also deliver a frictionless enhanced experience. So thinking about sort of what partnerships we need to do to get there. And that's kind of what we're thinking about today.
I mean, as a cynical analyst who's been around for too long, I would be very disappointed if your answer didn't also include the, well, look, we've got the customer, we've got them hooked. I mean, you look at digital wallets, you look at open banking, etc., etc. Yes, that's great, but as the world moves on, I mean, I would imagine that the Visas and MasterCards of this world love the idea of digital wallets and they love the idea of ancillary services. And you look at the size of your cash flow now, I guess one of your biggest problems is deciding what you want to build and own versus what you want to partner with.
Yeah, so we have a big base and acceptance, a big base from a card perspective, but what the solution that I sell today is account to account. So it's looking at how do we become, as I said, more inclusive, not just on the card rails, but also in other services and solutions that we sell. So really it's thinking around what assets can we bring to the table to support our partners to deliver really an enhanced solution. And sort of the cross-border services solution that we're talking about today is just one part of that that we're working quite hard on.
Sure. As I said, I was amazed having revisited your financials for the first time in a few years. Visa and MasterCard really are very big beasts these days. It's, moving on. The next question has a word in it that is used very liberally across payments. And I've just checked because I quite deliberately chose to try and not use it in the paper because it's one of these things that you just chuck at something to say it's a big issue. But interoperability, unfortunately, I've discovered I did use it once in the paper. Prizes for those who can find it. But the question is, and this to Jonathan first, interoperability is a big talking point as well. How do we enable non-banks to provide financial services and compete against the traditional banks? I mean, it's a big topic, but the point is, and I think Rasika from MasterCard probably said it in one of the interviews. She said, look, the banks have already won where they want to. What's your view? And when you think about interoperability, what does it actually mean and for whom?
I mean, I think, you know, part of this is about partnerships. So as you said, it's about people bringing their own, you know, their own capabilities to the partnership. I think technology is very much part of it as well. You know, and you know, particularly where you're building something from scratch, then you can kind of build it. It's, you know, it's fit for purpose for today, and essentially that addresses some of the issues that exist in, you know, what you might call the more sort of legacy systems and the way in which sort of, you know, the traditional banking system works. So, you know, if you're effectively starting with a blank sheet of paper, you could essentially build something that avoids some of the frustrations delays. I mean, I think you have to as well pick and choose where you're going to, you know, essentially sort of try and do business. So there will be certain types of payments that I think, yeah, banks will still be likely the best option. But I think if it's, you know, particularly for sort of higher frequency, smaller payments, you know, that certainly that's where some of these payments play. I think it's also about you know, what is the customer experience, making it customer giving confidence.
I'm struggling to hear you again, sorry.
Really? Can you hear me now?
Yeah, that's better, yeah.
Yeah. So I think it's also, you know, it's about customer experience, but also then, you know, building something where the customer essentially has confidence in you know, the fact that your method is secure and things like, you know, that all the fees are transparent.
Great. Moving on to a question about stable coins, because again, when we were writing the paper, we tried to avoid being all things to all people, but very clearly digital currencies is going to play a large part in the payments ecosystem, an increasingly large part in the future. And I guess, actually, I'll go to Nkosi as we just discussed this. Do you believe stablecoins and on-off ramping will play a bigger mainstream role in cross-border remittance in the coming 12 months? It doesn't have to just be 12 months, give us your time frame. But again, if you can expand a little bit on that, it would be much appreciated.
Okay, thanks, Jonathan. I think in terms of stable coins, we are seeing a few interesting use cases. As an example, one of our clients that delivers humanitarian aid into a number of countries has started running some pilots currently around delivery of aid to refugees coming out of Ukraine. And it is a model that they would like to expand into more countries. So it is something that we are looking at, but obviously there are still some regulatory considerations that we just need to look into just to be comfortable that in terms of all the countries where the client would like to deliver the funds, the regulatory environment is supportive of that. And I think we are seeing some of the remittance companies where they are using a variety of digital currencies. Again, not something that we're supporting at this point, but we are keeping a close eye on it. So I think in terms of the next 12 months, I don't think there'll be a major volumes in terms of remittances going through digital currencies, but I think in the next 5 years or so, we are likely to see significant usages, especially if there is a way in which the digital currencies or the stable coins can link into the central bank digital currencies that are being developed in some of the countries. So if there is a smooth flow of converting that USDC value into, say, the Naira digital coin, with the central banks fully comfortable with that process flow, then I think you may see an acceleration of usage of digital coins across various countries over the next few years.
Great, thank you. I mean, not quite the same question to Gary, but we talk a lot about digital currencies, crypto, etc., and these new fangled approaches to payments. Are we missing a trick? Not thinking about the legacy correspondent banking system, etc. So are we so busy looking forward for change that actually we're not fixing something that could be fit for purpose that's already there? Can you talk through your thoughts there?
Well, you're absolutely right. I mean, there are two ways. Let's just be candid. When you think of digital currencies, certainly some digital currencies, they've been created to try to overcome the inefficiencies of the correspondent banking system, but others have been created and are used for nefarious purposes. So I think that there is a role for digital currencies. Perhaps I'm not personally a big fan, but our platform is indifferent regarding the method of payment, the form of payment. We're bringing transparency and efficiency to all of it. But when you begin to fix the existing systems and the existing paradigms, and you add new paradigms, new partners that are really breaking new ground like MasterCard, it's going to put pressure on some of these newer concepts, whether it's digital currencies or other things, because their attractiveness is going to diminish. So I'm not suggesting that they're, you know, there's a rich, the market's big enough, the use cases are wide enough, these things will find a home, but if we address the root causes of the existing systems, the attractiveness of some of these newer alternatives goes away fast. I mean, certainly in remittances, I found it fascinating. I saw a panel a few months ago talk about, Bitcoin as an alternative to a cross-border payment. It's a joke. The math doesn't work. The time doesn't work. Cost of getting money into some cryptocurrency, the moving it, then the cost of converting out, it doesn't make sense. And I find these arguments really lacking in intellectual integrity to suggest that they're an absolute panacea for things that simply can be improved with the right tech and the right paradigm.
I see you feel strongly about that. It's I think as we discussed in the paper, there's a lot of airtime being given to things that either don't make sense or really shouldn't be as high up the agenda as they are currently. I mean, I'm conscious we're drawing near to the end of our time now. So I think as a good wrap up, I'd like to give each of you a couple of minutes just to talk through, when you think about your job, your role, the outlook, what isn't discussed enough? I mean, my favorite interview question I was taught when I was a lot younger is you should ask the person sitting opposite you, what question should I be asking you? Maybe start with Matthew, but what are people not spending enough time thinking about, working on, realizing is a very real opportunity? What haven't we touched on? Because it's a very big topic. So what's your sort of pet area that you think is important and underappreciated? So Matthew first.
I think for me, it's probably around the new and developing technologies actually that are actually driving automation in this space, and sort of really focusing on that and how can we improve things. From my side, it's really thinking around the growth of digital channels. We see a big trend in that side of things. So talking about that, and in particular for Mastercard with digital wallets, I think is a really interesting area to try and, to the point I said at the beginning, how do we create a more inclusive environment for everybody to send payments cross-border? And then the automation piece as well, I think, is another subset of that, around what are we doing in that space. And there's so much amazing work being done here in the UK and in Europe, broadly across globally, around sort of ways that we can improve things. And Payor, just one example of some of the great stuff that they're doing there, but around sort of like digital verification, procure to pay platforms that we're working with at the moment, embedding finance into there as well, and sort of creating a more seamless experience. So technology is behind, and the base from which everything else goes upon. So for me, I feel quite strongly about what are those new technologies and how can we work together and partner with different companies to achieve the goals. Brilliant, and thank you very much for your participation today. John, same question, please.
Yeah, can you hear me, by the way?
Yes, apparently I've had the same problem, so apologies if I haven't been clear.
Yeah. So I think, I mean, similar to Matt, I think the technology, and whether that is from the point of view of efficiency, but I think also customer experience. I think one of the things that would certainly help is, I guess a different topic is around consistency around what regulators, within different jurisdictions actually require. So, again, it's I think to one of the points that Gary made early on about, having a clear information and details on the transaction, on the sender, on the recipient, so that it removes some of the, I guess, the perception that, immediately because of the cross-border transaction, it makes it high risk. So I think having more consistency, across jurisdictions around a standardized set of this is the information that's required, I think would help from an efficiency point of view, but also to then have a more, I guess, sort of appropriate level of risk assessment against, cross-border transactions. Yeah.
Great, and again, thanks ever so much for your contribution today, and no doubt we will speak again. Same question to Nkosi, please. Nkosi.
Okay, probably just a couple of things from my side. The first one would be harmonization of the regulatory environments. So that's a big challenge for us. I think.
Do you think it will ever happen? Sorry to stop you there, but I mean, it's a bit like everything else. It's a really nice thing to talk about, but we sort of moved it down the list.
Yes, so fully agree. It's not something that will ever happen, but I think there are areas which maybe could facilitate in terms of trying to get to a common level of understanding. And I'll give you an example. One area we are seeing some progress in Africa is the Pan-African Payment and Settlement System, which is essentially connecting all the central banks into an ecosystem that will allow countries to settle trade transactions a lot more efficiently with each other, and it will encourage use of the local currencies to enable the settlement of those transactions. So in a way, maybe a small step, but I think it has brought the central banks closer together in terms of really understanding the variances across the continent and how they can collectively make that solution work efficiently for everyone. So fully agree, not something that will happen overnight, but an important first step. I think that the second thing, again, looking at it from the perspective of a bank that supports flows into and out of emerging markets, de-risking of certain jurisdictions by some of the major global banks, that in a way also excludes certain countries from financial transactions, and just makes the whole process a lot more difficult. So if there is a way of getting broader support for some of the smaller countries in terms of being inclusive in the global financial system, that will definitely be a major positive from our perspective. Thank you.
Brilliant. Thank you ever so much for your contribution. We've got about a minute until I think the system just switches it off. So very timely. Final question direct to Gary. Your exec overview in the report talked about how we should avoid familiarity bias. Great point. This does sound like a planted question, but who knows? Great point. Were you referring to the correspondent banking model in particular? So if you can keep it quite
no. I'll do in 10 seconds. It's literally everything. It's not allowing our understanding of how correspondent banks work, how foreign FX trading, how liquidity is provided, how processes are executed. Literally every component of the value chain and cross-border ecosystem. Let's not assume that the way it is today or has been for 50 years can't be changed. That's it. And that's what I would say. That's the area that we should push on.
Well, thank you very much, everybody. There's one question from an anonymous attendee that I can't answer. I'm not quite sure. But feel free to contact either TPA or me directly if it's in the paper, and I'll help. And with that, thank you again, everybody. I hope you enjoyed this. Hope you enjoyed the paper. And back to Kate.
Thank you very much, Jonathan, and thank you to all of our speakers today. That was a really thought-provoking session, and you tackled some big questions, so well done. Thank you, everyone, for attending today's webinar. If you have any further questions, please do contact us at events@thepaymentsassociation.org. You'll also shortly receive a survey for some feedback, as well as an email within the next 24 to 48 hours with a link to view the recording of the webinar. So on behalf of the Payments Association, Payall, and all of our speakers today, thank you very much for joining us, and have a great rest of your day.